Welcome back, everybody, for another deep dive. This time, we're going to be looking at investing.
Okay.
Okay. And specifically, three big ones that people always talk about:
Yeah.
stocks, real estate, and cryptocurrencies.
All right.
And we're really going to try to go, beyond just the surface
Yeah.
of each of these,
Absolutely.
and really kind of get into the nitty gritty
Right
of,
into the weeds.
yeah, get into the weeds of,
Yeah.
what are the advantages, what are the challenges,
For sure.
and maybe some nuances that people aren't even really aware of.
Some of the things that might surprise you
Yeah,
about them.
exactly.
Yeah.
So that the goal here is to really help equip you, the listener,
Right.
to make good decisions.
Yeah.
Whatever your investment goals might be.
Yeah. I think a lot of people, when they think about stocks, um, especially kind of get caught up in kind of the ticker symbols and, the daily fluctuations.
Yeah.
But I think it's really important to remember that when you buy a stock, you're buying ownership in a company.
It's not just gambling.
Exactly. It's
Right.
not just numbers on a screen.
Right.
You're actually buying a piece of their profits.
Yeah. You're becoming
Yeah.
a piece of their assets.
A part owner
In
in
their
that company.
It's like being a tiny partner in their success story. And so, you really have to think of it in terms of like, okay, if I was going to be a partner in this company,
Would this be a good company to partner with?
be happy with that.
Yeah.
I mean, for example, if you look at Amazon,
Right.
they started as an online bookstore
That's all they were?
and now they're,
And now they're everything.
they're this massive behemoth that's, you know,
Behemoth is a good word for it.
into, groceries and
Web service.
web services and
Sure.
shipping and delivery and everything else you can imagine.
Pretty much everything. If you had invested back when they were just a bookstore and you understood the potential and you held on for the long term,
Right.
you would have seen some incredible returns.
Incredible returns, but the thing about the stock market is
Yeah.
it's not always a smooth ride.
Oh, definitely not.
That can be
It can be very volatile.
very volatile.
Remember GameStop?
Yeah, what was that all about?
I mean, that was a few years back.
I mean,
But that was social media frenzy.
it was crazy.
Drove the price of that stock through the roof,
Yes.
only for it to come crashing back down.
Just on hype.
Yeah, and that's an extreme example.
Yeah.
But I think it really highlights how emotions and speculation can really drive those short-term swings.
So it's important to not get
Right.
caught up in the hype.
You got to look at the fundamentals.
Yeah, and look at the fundamentals of the company.
Yeah.
Speaking of fundamentals,
Okay.
let's talk about compounding.
All right. Let's talk about compounding.
Because that's something that is kind of a bedrock
It's like a snowball effect.
of long-term investing. Explain compounding to our listeners.
Okay, so imagine you invest a small amount and it earns a modest return.
Okay.
Instead of pocketing that return, you reinvest it.
Right.
Now, your initial investment plus that return are both earning money for you.
Got it.
Over time, those returns generate their own returns,
Okay.
and the growth becomes exponential.
So it just kind of
Just keeps building on itself.
builds on itself.
Yeah.
And it's really
That's the magic of compounding.
amazing to see how, a small amount of money
Yeah.
can grow so much over time.
Exactly. And it really highlights the importance of starting early.
Yeah, the earlier the better.
The sooner you plant that tree, the bigger it can grow.
But you wouldn't put all your seeds in one spot, right?
That's a good point. That brings us to diversification.
Okay, diversification.
Yeah.
So explain what that is.
So diversifying your portfolio is basically like creating a safety net
Right.
for your investments.
So you're not just betting everything
Instead of betting everything on one company or one sector,
on one company or one sector.
you spread your money across different industries,
Uh-huh.
maybe even different asset classes entirely.
So if one part of the market takes a hit,
Right.
your entire portfolio isn't sunk?
Exactly. It's about managing risk
Okay.
and building a portfolio that can weather those inevitable storms.
So how does somebody go about
Yeah,
effectively diversifying their
that's a great question.
portfolio?
There are a lot of different
Is
approaches.
there a rule of thumb?
Yeah.
Or
There are some rules of thumb.
like a certain strategy that you recommend?
A common one
Mm.
is to allocate your investments across different asset classes based on your risk tolerance and your time horizon.
Okay.
So, for instance, someone younger with a longer time horizon might be more comfortable with a higher allocation to stocks.
Right.
Whereas someone closer to retirement might favor a larger portion in bonds.
Okay.
And then within each of those asset classes, you can further diversify.
Okay.
So for stocks,
not just putting all your eggs in one basket.
Right.
You're putting them in multiple baskets.
exactly. And it's important to regularly review and rebalance your portfolio as your circumstances change.
Makes sense.
But let's shift gears a bit and talk about an asset class that's a bit more tangible.
Okay.
Real estate.
Real estate. Okay, so that's something I can wrap my head around a little more.
Yeah.
You're not buying, a digital token or a share of a company. You're
Right.
investing in a physical property.
Something you can see and touch.
Something you can see and touch.
That tangibility is a big draw for a lot of investors.
Yeah,
There's a certain sense of security that comes with owning a piece of land or a building.
for sure.
Plus, real estate offers a couple of distinct ways to potentially grow your wealth.
Okay.
One is through rental income,
Yeah, you've got that passive income coming in.
which can provide a steady stream of passive income.
Imagine owning an apartment building
Right.
and, the rent payments are covering your mortgage
Yes.
and maybe even putting some extra cash in your pocket every month.
That's the dream for a lot of real estate investors.
Yeah, for sure.
And then there's the potential for appreciation.
Right, because, historically,
Historically, real estate values have tended to increase over time,
especially in desirable locations.
especially in desirable locations.
Yeah, but real estate is not without its challenges.
Oh, of course not.
It can be, it's not as liquid as stocks.
Right.
Meaning that it can take time to sell a property
Yeah.
if you need to access your capital quickly.
Exactly.
And then there's the upfront cost.
Right.
I mean,
Real estate
Paramount.
often requires a significant down payment,
usually got to put a lot of money down.
not to mention closing costs and potential renovations.
Right, you may have to fix the place up.
Exactly.
And then there's the whole management aspect of it.
Being a landlord isn't always a walk in the park.
Right, you got to deal with tenants and repairs
Dealing with tenants handling repair,
and maintenance and all that stuff.
staying on top of property maintenance. It can be a lot of work
Yeah,
unless you hire a property manager,
right, which then cuts into your profits.
which of course eats into your profits.
So it's not always as easy as it sounds.
But for those who aren't ready to take on the responsibilities of direct property ownership,
Okay.
there's another way to tap into the real estate market.
Okay.
REITs,
Rates?
real estate investment trusts.
Okay, I've heard that term thrown around, but
Yeah.
I'm not entirely sure what they are.
Think of REITs as mutual funds for real estate.
Okay.
They pool money from multiple investors to purchase and manage a portfolio of properties.
Okay.
This allows individuals to invest in real estate without having to buy a whole building themselves.
So it's like getting a slice of the real estate pie
Exactly.
without having to bake the whole thing yourself.
And with REITs, you can still benefit from rental income and potential appreciation.
That sounds pretty appealing.
It can be, especially for those seeking diversification and passive income. But as with any investment, there are risks to consider.
Right.
The value of REITs can fluctuate,
Sure.
and they're not immune to market downturns.
So it's not a guaranteed win,
No,
just like anything else in the investing world.
pretty much.
Okay, so let's move on to an asset class that's really kind of known for its wild swings.
Okay.
Cryptocurrencies.
All right. Crypto.
So we've talked about ownership in companies
Yeah.
and ownership of physical property.
Uh-huh.
But what exactly are you owning when you buy a cryptocurrency?
That's a great question. And it gets to the heart of what makes cryptocurrencies so unique and, frankly, a bit mind-bending.
Oh, okay.
You're not owning a physical asset
Right.
or even a share of a company.
So what are you owning?
You're essentially owning a digital entry on a decentralized ledger called a blockchain.
Oh, okay, blockchain.
Yeah.
That's a term we hear a lot, but I'm not sure everyone really understands what it is.
Imagine a digital record of transactions that's distributed across a network of computers, rather than being controlled by a central authority like a bank or a government.
Okay.
That's essentially what a blockchain is.
So instead of having a bank verify your transactions,
Right.
it's this network of computers that's doing it.
Precisely.
Okay.
And because the data is distributed across so many different nodes,
Uh-huh.
it's incredibly secure
Okay.
and difficult to tamper with.
So that's the appeal. It's decentralized.
Yeah.
It's secure.
transparent.
And transparent.
Right.
Okay. But what about the actual value of cryptocurrencies?
Right.
How do you determine what a Bitcoin, for example, is worth?
That's where things get a bit tricky.
Yeah.
Unlike traditional assets like stocks or real estate,
Right.
cryptocurrencies don't have inherent value based on cash flows or underlying assets.
Hmm.
Their value is largely driven by supply and demand,
Okay.
market sentiment, and speculation.
So it's a bit like the Wild West of investing.
It can be.
High risk, high reward,
Yeah.
and a lot of unknowns.
A lot of unknowns.
But there must be something driving this incredible interest in crypto.
There are several factors.
Yeah, okay.
Some people are drawn to the decentralized nature of cryptocurrencies, seeing them as a way to opt out of traditional financial systems.
Okay.
Others are attracted to the potential for high returns.
Yep.
As we've seen some cryptocurrencies experience dramatic price increases.
I mean, remember that story about the guy who bought a pizza with Bitcoin back in the early days?
Oh, yeah.
If he had held on to that Bitcoin, it would be worth a fortune now.
Exactly. But we also have to remember the flip side.
Right.
Crypto is incredibly volatile.
Yeah.
The prices can swing wildly in a matter of hours.
Go up and down like crazy.
And there's always the risk of scams,
Yeah.
hacks,
Right.
and regulatory crackdowns.
So it's a roller coaster ride.
It can be.
Not for the faint of heart.
Definitely
Oh.
not for the faint of heart.
But for those who are willing to take on the risk,
Yeah.
cryptocurrencies offer a potential pathway to diversify their portfolios beyond traditional assets.
That's a key point. Cryptocurrencies represent a new asset class with its own unique characteristics
Okay.
and potential risks and rewards.
So really with anything.
As with any investment, thorough research
Yeah.
and a clear understanding of your own risk tolerances are essential.
Okay. So we've covered stocks,
Yeah.
real estate, and now cryptocurrencies.
3 big ones.
And we've seen how each asset class offers different pathways
Yeah?
to potentially grow your wealth,
Right.
but also come with their own sets of challenges.
Yeah, sure.
So is there a magic formula
That's the million-dollar question.
for figuring out which is the best investment?
I wish there was a magic formula.
Yeah, right.
If only.
It'd make things a lot easier.
Yeah, it would.
But, in reality, the best investment is really the one that aligns with
Right.
your individual goals and circumstances.
Oh, absolutely.
Your risk tolerance, your time horizon, all that stuff.
It's like figuring out what kind of car to buy.
Okay.
You wouldn't choose a sports car.
Right.
If you needed to haul a family of 5.
No, you wouldn't.
So it's about finding the right fit for your needs and circumstances.
So someone in their 20s
Right.
with a long time horizon ahead of them.
Might be more comfortable with a portfolio heavily weighted towards growth stocks,
Right.
whereas someone nearing retirement might prioritize income-generating investments,
Yeah.
like bonds or REITs.
Okay. And even if you're really excited about, one particular asset class,
Right.
like let's say crypto,
Diversification is still our friend.
it's still important to kind of spread things around.
Absolutely. Diversification helps manage risk
Right.
and smooth out the bumps in the road.
Right.
It's about not putting all your eggs in one basket.
And your allocation, can change over time
Of course.
as your circumstances change, as your goals change.
Your risk tolerance changes.
So it's not a set it and forget it kind of thing.
Exactly. It's an ongoing process.
You gotta kind of
Gotta stay engaged.
keep an eye on things and maybe work with, a financial advisor
Right. A financial advisor can provide personalized guidance,
to help you
help you develop a sound investment strategy.
navigate all that stuff.
Yeah, and keep you on track to reach your financial goals.
Okay, so let's recap a little bit
Okay.
what we've learned about these 3 investing avenues.
Okay. Stocks.
Stocks offer the potential for high returns, but with the caveat of volatility.
Right.
Real estate can provide tangible assets and steady cash flow, but it requires a significant upfront investment and comes with management responsibilities.
And then there's crypto,
Crypto, the Wild West of investing,
which has its own allure.
with its allure of decentralization and potential for massive gains,
Right.
but also with the risks of extreme volatility scams and regulatory uncertainty.
A lot to think about.
It is a lot to think about. But before we wrap things up here,
Yeah.
I'd like to hear if you have any final thoughts or...
I want to leave you with a thought-provoking question.
Okay.
Think about the world you want to see. Okay, could your investments play a role in making that happen?
So you're saying that, our investment choices
Absolutely.
can actually have an impact beyond
just growing our own wealth.
yes, growing our own wealth.
Yeah, there's a growing movement towards impact investing,
Impact investing, okay.
where individuals are choosing to support companies and projects that align with their values.
So whether it's, sustainability or social justice or advancements in healthcare,
Right.
our investments can actually be a force for good.
It's about aligning your money with your values.
So it's not just about, making money.
It's about making a difference.
It's about making a difference.
Exactly.
Well, this has been a really enlightening discussion.
It has been.
We've learned a lot about stocks, real estate, cryptocurrencies.
We covered a lot of ground.
And the power of, aligning our investments with our values.
That's all connected.
So thanks for walking us through all that.
My pleasure.
And for our listeners out there, remember, knowledge is power. And the more you understand about the world of investing, the better equipped you'll be to make smart choices and create a brighter future.
For yourself and for the world around you.
I like that. Well said.
Thank you.
All right, that's all the time we have for this deep dive.
Okay.
Thanks for tuning in, everybody.
Thanks for listening.